right, folks, just a reminder, these trades are done in a simulator. It's important to understand the limitations of hypothetical results. Make sure you read that hypothetical risk disclaimer you see on the screen. If you have any questions about what it means, please feel free to contact us. You can email trade@infinityfutures.com with any specific questions. Thanks again. Hey everybody, good morning. It's about 8:47 on the 25th of September. Just wanted to go through a couple of other setups here that are coming into play. Pretty good movement this morning in the four indexes. A little bit disjointed, the kind of thing that I'm generally looking for. It looked a little uglier this morning when I came in, but the market recovered a bit and then things started to go a little bit out of whack in terms of the index's performance. So as an example, the S&P right now is down about 0.17%, the Dow's down 0.1, the Nasdaq's down 0.35, and the Russell is up 0.33%. So that's the kind of day that I'm generally looking for choppy action unless it becomes obvious that these four markets are going to move in tandem one way or the other. Obviously, we've got a lot of geopolitical news and all kinds of things happening out there right now, so lots to consider. But here's basically what we saw so far. So the S&P peaked up earlier. I was looking for some short opportunities in the micros again to sort of scale in. It's not very common where I'll put a sell order in, it'll get hit, and then later one of my original buy orders, which was actually an intended long position, gets filled, which offsets the position. So normally I wouldn't be going for a $25 trade in the micro, but that's just how this one played out. So that contract right now is currently flat. What I'm doing there is I'm working an order to buy one around the mid VWAP at 29.63. So that's what that order is there. And then if we go a little bit lower, I have an order to buy four at 29.56, which is right around the lower extreme MPD line, which I probably move that up to maybe 57 since that line has shifted up just a little bit. So that's what's going on with the S&P. We'll see how that plays out in a little bit. And then with the Nasdaq, I had an entry that is actually about to get doubled up here. I had a buy order at 77.05, right around the lower half MPD line, which just got filled. So now we're long two micro NASDAQ contracts. So if that continues lower, I might look to add to it again, just again, given the small nature of the contract around the lower MPD. And then if things really fell apart, we'd have to figure out how to manage that, either by stopping ourselves out or looking to some of the other indexes. And here's what I mean by that. So that currently is long two contracts. The Russell, I have actually an existing short on right now. You can see here. And what basically happened there is the same thing. We had the market rebound a little bit. Two of my orders got both of them got filled, which generated a $20 gain. I didn't really intend for that position to get closed, but it did. And now I have only one sell order in, and that sell is from 1543. So that's just continuing to work. So if that NASDAQ really starts to fall and it takes the Russell down with it, at least we've got some short exposure on the Russell that to offset some of the loss. So we'll see what happens with that one. And then similarly with the Dow here, the Dow, I had a sell order in that went in right up here at 26,855. Let's see, it was right in this area. This is where the half MPD was. That shifted up a little bit, but that was working a sell order that got filled, and now the market has come back off of that level a little bit. So this is one of the reasons why I like these micro contracts. I think this is a proper use of these contracts. There's not a lot of activity. We can kind of take our time and see how these things play out. Right now, the S&P is breaking a little bit, so one of our entries might get filled there at 63. So we'll see how that works. But you can do this with the regular indexes as well. You just need to be prepared to be able to take some heat from time to time, or have an account that can support, scaling in from time to time, and from you may be in positions that are painful for a little bit, and you have to have some sort of point where you're willing to just cut yourself off, because if you get on the wrong side of something like this in a number of different products, and the market shifts from this choppy, bouncy uh, nature to really, really trend like. Maybe there's an announcement or economic data, Trump's tweeting, something like that. There's going to be days where this thing just falls apart, and you have to be able to deal with that. So that's what I was alluding to in one of the earlier videos, that counter trend trading requires a certain personality. You've got to know your limitations. All right, I feel no pressure, you know, related to that right now. Not only because this is a simulated environment, but Obviously I'm putting this stuff out there in public, so I want it to work. But I'm not feeling pressure because of the small size of the contract. I feel like spreading the risk around a few different products, keeping reasonable max limits in terms of how many contracts I'm willing to put on. There, with the market moving the way it is, you don't have to trade a lot of these at a time in order to have what I would consider to be a productive day. And you don't even have to look at the market constantly throughout the day. There was a video that I did yesterday where there was like a 2 or 3 hour period where I was just slammed here at the office and I couldn't pay attention. I still had some orders out there, and then I kind of came back when things were moving late in the afternoon or after 12 o'clock or so. But there was a period of time where I just was focused on other things, and because of the small size of the contracts, it allows me to participate in something that I like and something that I think has promise and still do my duties. So that's one of the reasons why I enjoy, making these videos and talking about this style of looking at things. There's not a lot of hardcore technical analysis. I like to watch, the geopolitical events, and I'm interested in the dynamic relationship between these different markets and other markets as well. We'll get into crude and some other fun things too. But I find it to be, very rewarding to be able to share these ideas and encourage people to scale back the frequency with their trading. And it's kind of surprising to some people because we make money on commission, so you would think we would be encouraging people to be more active. But I believe longevity to be the key here, and I think that this is a way that regular people can sustain their interest in the markets, participate, and not carry the same sort of risks as if they were trading the full size contracts on a super short term basis, 50 times a day. So, a little aside there. We'll see how things play out. I'm watching everything. We'll come back with an update here in a little bit. Please send your feedback, comments, questions. We welcome it all. Thank you. All right, everybody, just one more update here. Markets are moving a lot, so things broke down a little bit with that Trump transcript, and I had some orders working below that lower mid-range MPD line in some of these markets. So they rebounded pretty quick. I mean, one of the nice parts about the micros, if you use them this way, is you can afford to stage these orders out there. And when everyone else is getting just terrified and getting their heads ripped off because they're not, correctly managing their position size, you can afford to hang with this for a while. I mean, I was in a couple of open trade losers here that I might have been down at one point $250 across all four of the indexes. I mean, that's just tolerable for most of our users. So as an example, the S&P was added to. I ended up peeling a couple of those off. That's looking pretty good. The Nasdaq, as expected, dipped the hardest. I had a couple of orders out there. I was long 4 micros. I took a couple of them off. I realized a small loss on the original position, but the remainder of the position is looking good. So if the market continues to rally, we'll just kind of leave that be for a little while. The Russell here also has rebounded, and that one's looking decent as well. And then lastly, the Dow right here still has one on. So, the combination of all these contracts together is still less than basically one E-mini. And I'm 18 by 11, so, there's a little bit of activity considering how volatile it was. It's pretty reasonable. And as far as P&L goes, in terms of P&L going as of this moment, it's about $370, and it's all unrealized at this point, the majority of it. So anything can happen. And of course, again, this is a simulator, so there are limitations to that we all have to accept that. But again, I'm putting this content out there, to my live customers and prospective customers, and it's kind of got my name attached to it, so I care, and that's this is something I'd like to see more people, do. And it doesn't mean you have to hyper scalp these things. It's not worth it. It's not going to be worth the cost. It's not going to be worth the time. But with the market moving the way it is, again, play these ranges. Look at the fact that some of these markets dip below that lower MPD line, but some didn't. The disjointedness is still there. All the markets are still a little bit down in the day. The Nasdaq is the outlier. But for example, that RTY never made it to the lower MPD. The Dow never made it to the lower MPD. These are reasons why I wasn't afraid to, to add to those positions a little bit and to stick with the ones I had in the other products. So, these are contextual relationships that you have to pay attention to. Trading through an economic climate like this or a geopolitical climate obviously carries unique risks. If that call gets released and there's that blatant quid pro quo that everybody's talking about and the Dow falls, 300 points in 5 seconds. I mean, that's a risk you have to take if you're going to be long the market. So we're never going to be able to mitigate those entirely, but what we can do is prepare ourselves to deal with these little violent shakeouts that really tend to send day traders panicking and packing. And with the micro contracts, I think this is a good use of what what maybe they were intended for, and we're seeing that play out in real time here today. So we'll see what happens. The markets are retreating a little bit here. I might end up with a couple of stops at break even on some of these things and kind of just start fresh. Nothing wrong with that. We'll come back if that's the case, and I'll give you another update here in a bit. We'll see what happens. Thanks. All right, everybody, it's Patrick. Thanks for coming back. So just another quick update of where we're at. The markets did rebound here, and they really were fighting hard to get closer to that VWAP level on all of these indexes. I was really thinking that they were pressing, and I had a thought that these things were going to continue to rally. So I left the positions pretty much all on. The only thing that's flat right now is the Dow. So let me give you a quick recap of each one. So on the S&P, uh, we're still long one contract. I actually have an order to sell two at 72.5, which would basically reverse us around this level. So if the market really rips higher here, I'm willing to actually put on a short just to see if we rebound back towards that VWAP. I may pull that depending on how the other markets are doing. If everything's looking super strong, then I may just take profit on a one lot at that level and let the other one and just be flat and then reevaluate. That's what's going on with the S&P. With the Nasdaq, I have still only one left, and the order to get out is way up here. Actually, no, I canceled the order to get out. I was going to work an order at around 77.40, but with the Nasdaq having a tendency to, really rip through those levels, I decided just to hang tight on that one. There's really nothing to be done there. The only thing I'm doing with the Nasdaq is I have a stop in at 77.14 way down here. So this is even a little tight for the Nasdaq considering how volatile the Nasdaq is, but I was hoping to at least keep some gain because I only have a small realized gain in the NQ. So I wanted to keep that a little tighter. So that's where we're at with that one. And then the Russell. Okay, here's the Russell. The Russell's long, still just one contract, or long two contracts. I have one target at 1537.60. That's the only thing that I'm working in the Russell, actually at that level. And then I have another one at 40, which represents kind of this mid VWAP level right here. So, the idea is that there's a chance that we stall out or maybe revert back to the mean up in that area. So if we get up there, we're going to be flat the Russell. So there's that. And then for the Dow, there's nothing on. So the Dow, we took profit at that upper MPD area. That we only had one on. So right now there's no position, but I'm actually working to sell one contract at 26,910, which is right up this upper MPD area, because that's basically the closest, of all the markets, it's the closest to that upper MPD area. Unless the other markets really start to pick up, I'd be willing to take a short there, given that the Dow will probably be the first one to reach it. So if that changes, I may cancel or pull that, but as of right now, that's where it's at. So again, that's just another quick update. We'll see how this thing plays out. Hopefully you're trying to think of ways to incorporate this into your daily experience, and let me know if you need some help doing so. Thanks.